taking notes here. Well, I'm good. I'm not as good as you think Nvidia is going to be, though. I mean, these are not typos. You think it's going to head close to 70 times PE before the end of the year, and it's going to hit $6 trillion in market cap at $250 a share? Do tell.
I think so. I think so. By the end of the year, as people start to look forward to what they're going to do in 2025. Yeah, like I know you talk all the time, Scott, to people like Stacey Raskin, who says, this stock is still cheap. And yet nobody seems to believe it. But here are the numbers. Over the last 5 years, Nvidia's average look forward price earnings multiple has been 40 times. Yesterday, after this 2-day correction, it was 39 times forward price earnings. But there have been 3 times in the last 5 years where it's had a look forward price earnings multiple of over 50x, and 2 times in the last 5 years where it's gotten just about to 70x and then it pulled back. So we just haven't seen that euphoria yet.
It didn't just pull back at those times. It got destroyed.
It got destroyed, yes, a couple of those times. So, this is a high flyer, and expectations can reset on a bad earnings report, but they can also get equally overhyped on good news. And despite the fact the stock's had an enormous run, the euphoria hasn't yet caught up in terms of the go forward multiple. I think what's going to happen in the second half of this year, as people start to see how well the Blackwell chips are selling, how good the gross margins are on those, and start thinking about what's to come with the Rubin chips around the corner, their next generation after that, I think we'll start to see that euphoria reflected in a lofty go forward price earnings multiple. And if that happens, this thing could go to $6 trillion market cap.
You don't think they're over-earning at all right now, just based on the flood of orders? They're kind of the only game in town.
Well, they're selling to these big hyperscalers. But think about it. Who are they going to sell to? They can't make enough of these chips to sell to everybody on the planet. So they got to prioritize. Why wouldn't you prioritize to these hyperscalers who are putting in orders, as large as they possibly can to lock up as many of these chips that they can currently get their hands on, the H100s, H200s. And so that's supposed to be a bad thing. That's supposed to be a sign that, it's overly concentrated to these folks.
Well, it's not a bad thing.
I don't think so.
It is what it is. But I mean, you have to extrapolate what you think the future is going to look like based on everything that you just said right now. I mean, there are other competitors out there who are going to be making chips and selling them to potentially the hyperscalers too, and other players as well. Granted, Nvidia has the whole football field to itself, so it can go up and down the field unabated. There's no defense. But eventually, there might be some defense on that field.
Years down the road. So they've got to use your analogy, Scott, they've got 80 yards of clear turf in front of them to keep running towards touchdown. Nobody's catching up to them. There's just a bunch of lazy linebackers behind them. So I think it's years away from that happening. They're gonna take advantage of that lead that they have, and it's not expensive. Coatue had an earnings slide recently that talked about how this is not Cisco in the .com era. Back then, Cisco's go forward PE multiple got to a peak of something like 136x. Again, we're below the mean for the last 5 years. So even though the stock has done so well, it is still relatively cheap compared to where it's traded in the past.